Gold, the king of precious metals, has been used as a form of currency for over 2,500 years. While empires have risen and fallen, while currencies have come and gone, gold has remained a constant, unwavering presence in the global economy. There's a reason why gold is often referred to as the wise man's metal. Its stability and enduring value have made it a go-to investment for generations. Whether you're in New York, London, Tokyo, or Mumbai, gold is universally recognized and respected. It's not just a commodity, it's a global language of wealth and security. Now, here's where things get really interesting. Unlike other markets that often react to events after they happen, the gold market seems to have a sixth sense. It's like the Nostradamus of the financial world, anticipating events before they unfold. Let me give you a concrete example. Between 2015 and 2020, something remarkable happened. While other markets were still figuring out which way was up, gold quietly doubled in value. It's as if gold knew something big was coming and decided to get a head start. This predictive quality of gold is what sets it apart from other commodities and investments. It doesn't just follow trends, it often leads them. And that brings us to our next point. In the world of commodities, gold is like that friend who always seems to be one step ahead of everyone else. It doesn't need a weak dollar or a strong euro to shine. Gold marches to the beat of its own drum. Time and time again, we've seen gold lead the charge in commodity bull markets. When gold starts to move, it's often a signal that other commodities are about to follow suit. It's like the first domino in a long line. Once gold starts falling, the rest of the commodity market tends to follow. Speaking of commodities, let's take a moment to look at the broader picture. Many analysts are predicting a significant rise in various commodities. We're talking about everyday items like sugar and cocoa, as well as crucial resources like natural gas. But here's the kicker: while these commodities are expected to perform well, gold is predicted to outshine them all. Based on historical patterns and current market conditions, gold is poised to outperform other commodities on a percentage basis. This isn't just speculation. We've seen this happen in previous market cycles. When the commodity market heats up, gold tends to be the star performer, often leaving other commodities in its glittering wake. Now, let's shift our focus to gold's often overlooked cousin, silver. If gold is the king of precious metals, then silver is the prince waiting in the wings. In recent years, silver has been something of an underperformer compared to gold. It's been like a runner who's fallen behind in a marathon. But here's the thing about silver. It has a historical tendency to play catch up. And when it does, the gains can be spectacular. Think of silver as a coiled spring. It's been compressed for a while, but when it finally releases, watch out. The potential for significant gains in the silver market is enormous, especially given its current undervalued status relative to gold. Now, let's put on our forecasting hats and look at the big picture for gold. Based on analysis of previous bull markets, we're potentially looking at a 7 to 8-fold increase from gold's bear market low of $1,050. What does this mean in practical terms? Well, hold on to your hats, because we could be looking at gold prices reaching $7,000 to $8,000 per ounce. Yes, you heard that right, $7,000 to $8,000 per ounce. Now, I know what you're thinking. That's impossible. Gold could never go that high, but remember, in the world of precious metals, the impossible has a funny way of becoming possible. Just ask anyone who doubted gold could break $1,000 back in the early 2000s. So what does the future hold for our dynamic duo of precious metals? Well, if our analysis is correct, we're in for quite a ride. The next phase for gold and silver could be more dynamic than anything we've seen before. We're talking about quicker price increases, more volatility, and potentially huge gains. Let's consider a scenario. If gold does indeed reach that $8,000 mark we discussed earlier, what might that mean for silver? Based on historical ratios and market dynamics, we could potentially see silver prices range up to $240 per ounce. Now, let that sink in for a moment. We're talking about a potential increase of over 900% from current silver prices. That's not just a bull market, that's a charging, snorting, earth-shaking bull market. One thing to keep in mind as we look to the future of gold and silver market speed. The days of slow, steady increases might be behind us. Instead, we could be looking at a market that moves at breakneck speed. We might see days where gold and silver prices make huge leaps or drops in a matter of hours. This isn't a market for the faint of heart. It's going to be a roller coaster ride with all the thrills and chills that come with it. But for those who are prepared, who have done their research, and who have the courage to seize the moment, the potential rewards could be enormous. As we wrap up this deep dive into the world of precious metals, let's recap the key points. Gold has a 2,500-year track record as a stable store of value. The gold market often anticipates major events before they happen. Gold tends to lead other commodities in bull markets. While many commodities are expected to rise, gold is predicted to outperform them. Silver, despite recent underperformance, has huge potential for growth. we could be looking at gold prices of $7,000 to $8,000 per ounce in this bull market. If gold reaches these levels, silver could potentially hit $240 per ounce. The precious metals market is likely to move quickly, with large price swings becoming common. So what does all this mean for you, the investor? Well, it means that we might be standing on the precipice of one of the greatest bull markets in the history of precious metals. The opportunity is there, glittering before us like a gold nugget in a mountain stream. But remember, with great potential comes great responsibility. Always do your own research, understand the risks, and never invest more than you can afford to lose. The world of precious metals can be rewarding, but it can also be unforgiving to the unprepared. That's all for today, folks. If you found this video helpful, please don't forget to like, subscribe, and hit that notification bell so you don't miss our future market analyses.